Good morning. Welcome to SOXX Insights. Today is October 31st. We're just pre the market open. We had Amazon, Apple, and Coinbase earnings last night. So to go through them each individually before going our usual chart analysis. First up, Apple. Apple is about to open 2% higher today. The earnings were pretty respectable. Revenue up 8% year on year, $100 billion plus quarterly revenue now. iPhone rose by 6% year on year, and a lot of the growth was driven by iPhone 17 in a solid September month. MacBooks up 13% year on year thanks to MacBook Air. Services also up 13%. In terms of the regional breakdown, the US, Americas were only up 6% year on year. So growth regions, Europe grew by 15% year on year, followed by Japan, 12%, and then the rest of APAC, 14%. But unfortunately, China was down 4% year on year because of the supply constraint. And also, Apple mentioned that the government subsidies for smartphones were really capped because of the price points of Apple. However, because the supply constraint couldn't meet the demand back in the September quarter, the new quarter between October and December will actually see accelerated growth due to the easing of the supply constraint, and therefore Apple being able to meet demand more robustly. So for this quarter we're in now, Apple is projecting a 10 to 12% growth year on year. Operating income up 10% year on year, so that's pretty in terms of margins, and earnings per share up 13% year on year. CapEx actually grew by 35% year on year, which is actually quite a big jump. It's because Apple is now trying to build more in-house cloud compute for Apple Intelligence, and they're trying to establish personalized Siri next. So imagine ChatGPT now when you can talk to ChatGPT and it gives you all the same smart AI answers. They basically want to transfer that capability into Siri. And there, to be honest, there is no reason why Siri can't be as smart as something like ChatGPT. Moving on to Amazon. Amazon's share price jumped by over 12% overnight. We're going to go into details on why, but if you looked at the previous 5 quarters, we basically had flat to negative earnings reaction every single time, largely because AWS growth did slow in those quarters, and also the CEO is pretty boring compared to the other Mac 7 CEOs, especially against someone like Elon Musk. So this 12% jump is pretty good. It's the best jump we've seen in the past 3 years, and it's mainly thanks to AWS growing at 20% year on year. This is an accelerated pace compared to the 17% or so from the previous quarters. In terms of run rate, we're looking at $130 billion run rate for AWS, and they're boasting a backlog of $200 billion plus. So for AWS, the arguments that there is so much demand is actually the supply they cannot keep up with. And the AI platforms for AWS has grown 150% quarter on quarter. That's pretty incredible. Then onto the international markets. So this is more on the retail side and marketing side. We're looking at 14% year on year growth, which is pretty good. Then North America, 11%. In terms of operating income, Amazon operating income actually came in flat despite the strong headline figures. This is because they had to settle a $2.5 billion fine from FTC because of the practices in Amazon Prime in enrolling customers and making it quite difficult for them to cancel. Also, there was a $1.8 billion severance charge for the recent layoffs, and I think Amazon is continuing to shrink its workforce globally. EPS, strong growth of 51%. CapEx, $34 billion in the quarter, up 55% year on year. So it's a very heavy spending again. Similar pace as Q2 in terms of a percentage of revenue. Amazon is using that money to build its AWS AI infrastructure and its in-house custom silicons. So Amazon is trying to create better price points on a performance-adjusted basis in terms of training and inference chips. So the customers don't have to pay for the expensive NVDA chips. Finally, Coinbase, it will open around 4% today. Again, this is a very nice reversal of what we saw in the previous 6 quarters, where the market essentially sold off after the earnings every single time, regardless of where the revenue surprise came from. So overall, the Q3 revenue was $1.9 billion, up 66% year on year. This is very good compared to Q2 when the growth was flat against a year ago. Most of Coinbase's revenue comes from the US, 1.5 billion out of the 1.9, and most of that is also from transactions. So if we break down Coinbase transaction revenue, consumers, so retail consumers, contributed around $840 million. That's up 75% year on year. So it's a big chunk of the overall transaction volume. Institutional investors contributed to $135 million in revenue. This is triple-digit growth, which is great, but still a very small slice of the overall transaction pie. We want to see growing institutional involvement. That's where the big money is going to be made in the future. If you think about consumers, if consumer behavior is really dependent on the market cycle, where there is bigger tickets and volume, and in terms of consistency as well from the institutional side, once institutional clients are on board. In terms of subscriptions, so these are the recurring revenues that you would expect to be more stable than transactions. $750 million in Q3, up 34% year on year. So this is actually a bit slower than what I would like to see. I really want to see the subscription side being up 50% or even 100% year on year, because that's where the juice is. That will give Coinbase a higher valuation multiple. Stablecoins contributed towards $350 million, up 44%. Blockchain reward up 19%, and other subscriptions revenue, including the custody stuff, up 58%. So that's fairly respectable. Again, 143 million in those other areas. I want to see higher numbers from those as well, because when we have more treasury companies and ETFs being launched in Bitcoin, Ethereum, Solana, we want Coinbase to be chosen as the number one custodian for those companies in terms of storage. So I think that will be a big part of the narrative for Coinbase going forward. And the overall aim for Coinbase is to become the one everything exchange for blockchain and crypto. So we're about 10 minutes away from the opens. By the time we get to the Max 7 stuff, we probably hit the open already. But looking at SPY, going into the FOMC, SPY reached our wave 3 target already. So the wave 5, which we marked as 690 region. We could be starting to think about this wave 4 pullback here. I mean, we could get a new shot into an all-time high and then try the 700 level straight away. Of course, it could happen in such a strong bull market, but we need to be aware of the possibility of the wave 4 pullback, which could again test this 660 level to 670 level, where there's a strong volume profile, as well as the 50-day moving average and the bottom 14 line of this price channel. So I do think we will retest this region again, 660 to 670, and we could have a shallow wave 4, but we will out the downfall once we get the initial pullback. QQQ, similarly, QQQ reached our wave 5 or 3 target, and actually a little bit more by going outside of this price channel. and hitting 633, which is almost the 20% extension wave 4 here. So from here, I do think we can get a pullback towards the 600 mark to 610 mark, where there's a big healthy volume profile, as well as a 50-day moving average, and this supporting trend line in terms of the price channel since May. So this is my this would be where I expect the next corrective pullback to be. I don't think this will be the top of this cycle. I do think we will see new all-time highs, much higher highs in this cycle. But in terms of next pullback, I can see it retesting around 600 region first. The 30-year yield. So this actually has bounced very nicely in terms of what we expected as well. So this wave 4 bounce that already met the target, the very shallow end of the target of 4.65%, but it could stretch and get to 4.7%, feel this more completely. But I do expect lower rates going to next year and potentially challenging the low 4% region. TLT, I do think this pullback is a wave 4 pullback. We could even retest the 50-day moving average where there's a healthy volume profile here. But I do think there will be a wave 5 higher that could end up in the high 90s. Oil had a sharp surge last week and now falling back into this supportive region, which had been a battle area in the past few months. So it's hanging by the thread here. I do think the overall direction should be towards the downside near the low 60s, potentially 62 to 65 region. I think to get a new high from here will be very difficult. Bitcoin, we saw Bitcoin retesting the supportive region, which has held as support since July. And that's exactly where the 200-day moving average is as well. So this is a key battleground. I have shifted my read of waves 1, 2 to this price. So this now an ending diagonal. So what do I mean by that? In an ending diagonal, which happens in wave 5s, so of this high degree, each of the 5 waves could have just 3 waves, subwaves inside. So this is a wave A, B, C as a wave 1. This is contrast with the impulsive waves that you normally see as wave 1, 2, 3, 4, 5 inside the larger degree wave 1s and 3s and 5. So now all of those 5 waves could just have 3 subwaves of A, B, C here. So in terms of my expectation, so once you have something like this, you could have the next moves that act more like this. But in terms of wave 3, we could surpass the new all-time high first before the ultimate high in this cycle around 140K plus region. Ether, in fairness, this price zone around 3,700 has held pretty well so far. There is a good chance this wave C did end over here, but if it didn't, and let's say this is a 3-wave motion, we could retest the 200-day moving average and this volume profile here as support. And just give you a sense of what that could look like, we could have a 3-wave motion further down around 3,100 to 3,300. But if we do still hold this low, then we can start looking at the 1-2 setup here, targeting wave 3. But I really want to see evidence of bullish movements. So getting over this 50-day moving average first, then this strong resistance region around 4,700 with lows of volume profile. So when the price travels here, we could get a lot of backholders to sell at a break even. And that will be a source of new resistance. So once we break that, then the path to the new wave 3 will be much clearer. So for Solana, again, we could have bottomed in this sell-off around October 10, but if we fall through this 200-day moving average, and therefore this is actually a 3 subwave in wave C, we could retest at the 140 to 150 region next. And to be honest, if we get to that level, I think the market will feel extremely pessimistic in terms of the space. But however, my primary expectation is for this to now hold as wave C, and we can start looking at the overall wave 5 higher in terms of the subdegrees. We need to get past this volume profile and the 50-day moving average for us to gain that confidence. So the US market has opened now. Coinbase has been trading in this large wedge, but the range has now been shrinking over time. So today's price open is at 3% plus, which is good. So at least with this wave 2 of 5 is still holding nicely here. And from here, I would expect a wave 3 high next. So breaking out of this wedge and into the high 4. So the first resistance really is this green line here around 390, and then we can look at the high 400s afterwards. In terms of the subwaves, my expectation could look like something like this. So this would have been a 1-2-1-2 setup, and then we get an impulsive wave 3 move up, and first targeting 440, and then 470 after. Robinhood, we are close to the wave 5 of 5 here. And I do think the wave 5 could stretch towards 160 plus or even 170. So overall, this chart is still bullish with a very strong bullish trend and 50-day and the 50-day moving average acting as a rolling support. So until we break through this, I don't really see a case for being bearish too soon just yet. BMNR. So unfortunately, we broke down the October 22nd low yesterday. And then yesterday we had a 10% drop, which was pretty aggressive. And if you think of this as a wave 5 subwave of this C wave, then there is room for this wave 5 to drop into the 41 to 44 region. So yesterday we closed at 44.3, so pretty close. And so it really depends on how the market acts in the next couple of days. I do think 41 to 44 is an attractive buying region, and then we can start looking at the wave 3 higher after. It does need the crypto market first in Bitcoin and then Ether, because it's the Ether treasury company, to cooperate first. Gold, so this parabolic run-up has seen a quite steep pullback in the past couple of weeks, but some buys have emerged in this 360 to 370 level. You can see the volume profile building over here, and the retrace did reach the 360 mark, which is the 38% retrace of this wave 3. So the shallow end of our retrace target has been met, but there is room for it to really retest this 50-day moving average and just inside the 50% retrace of wave 3 to really complete this wave 4. So at the moment, I'm still a little bit neutral. I do think gold has to prove itself a little bit after this pullback before we can conclude the bottom is in. Apple has pulled back slightly from the open, and we are still looking at this overall structure of wave 5 higher, which has a target around 300 plus. And I do think we're in wave 3 of this wave 5. Overall, as we enter November and December, Apple does tend to do pretty well in November because of the shopping season in the lead up towards Black Friday. And I think investors will be tracking the lead time for iPhone 17 to see the demand. I think the demand is there, especially with the management guidance. The big issue is if Apple can no longer keep up with the supply side, which was an issue for iPhone 16 and back in Q2. Amazon popped 12% at the open, and this actually reached wave 3 region directly. So I do think wave 3 can test 250 to 260 here before wave 4 pullback, and then ultimately the wave 5 target is in the 260 to 270 region. So if you missed this, I would be slightly more neutral here at these levels. And I would for a better entry in this wave 4 before targeting the final leg of this wave 5. Google saw good results yesterday. It was up around 5-6% before the open, and then it sold off after the open. And this price action actually was pretty much in line with what I expected for Google to fill out this wave 3 directly after the earnings, and we get a wave 4 pullback subsequently. I think this wave 4 pullback could test 270 mark, and then we get one more high in wave 5 above 300. Meta's post-earnings reaction dropped directly below the 200-day moving average. And actually, the price action today is still not that encouraging. Our machine learning model has turned back to risk off. What I can see is that this could be a this could be a combo of ABC waves. So XY, we don't see this combination that often, but it does happen. The thing with this Y wave is that the termination zone is quite varied. It could be anywhere between 100 to 160% of this W. So it's not like a standard wave C. So what I would expect is that we could get a gap fill next for this wave B bounce, and then attempting this 50-day moving average before turning down for a final leg of wave C in this wave Y. The problem investors have is the rapidly rising expenses in Meta, as well as the big capex figures. The capex is the main thing. So Meta is spending a huge percentage of its revenue as capex, and I think that unnerved investors because Meta did a pivot back in 2021, 22. That's when they relabeled Facebook as Meta. So I think the investors are a bit nervous that this could be a repeat of that time. But I think in terms of the overall AI narrative, hyperscalers need to spend a lot of money because actually there is a huge demand. The huge backlogs you can see from Microsoft, AWS. So this may not be like the 2022, but in terms of price action, I'll be just a bit more cautious. Or if I were to play long here, I'll probably take profit at the 50-day moving average. Just get out of the way first, and then see how the price accordingly. So Microsoft, I do think we are in wave 5 here, and this pullback after earnings could be the buying opportunity to target this wave 3 into 570 above. And the thing with this overall wave 5 is an ending diagonal, like I mentioned before. So every wave is 3 subwaves. So we got an ABC in this wave 1, and we could be looking at A in this wave 3 as well. So I do think the 50-day moving average would be very attractive, but anyway, inside this green box is a buyable region with a tight stop below this wave 2. NVDA, the sentiment shifted really quickly last week. So we saw big gap ups every day for NVIDIA to reach above 200 for the first time, moving past this channel. So for me, this wave 5 did fill out completely. So this wave 5 filled out at the 1.76 extension of this wave 4. So this is a typical termination zone for this up move. However, it's quite difficult to short in this bull market, so I actually would wait a little bit to see how it unfolds from here before determining the next leg. So Tesla, I did expect we get a pullback this week into the 405 to 440 region, and I did think that once we get to this region, it's a decent buying opportunity against a stop loss below this wave 4 low against all 5 waves to reach somewhere in the 560 or even 570 area. It's not actually incredibly clear that this wave 2 completed already, but let's say if we had, we're looking at a wave 3 target around 520 to 530 region. PLTR, I'm turning neutral here because we are already at the wave 5 target region. So this is at the 1.76 extension of this wave 4. So we've had a $200 mark for a while. It's met here. I'm turning more neutral. I'm not saying the stock will fall tomorrow and this is it, but I wouldn't chase it here. And if I were holding, rotate away from this. SOXX is very difficult to call the top on this one as well. And the price has been pretty bullish in the past couple of months. So we just have to see how it lines up. It does tend to move with SPY quite heavily into new highs. So we'll just see how it reacts from here before I wait for. So that's it. Thank you for joining me this week. Speak again next week.